Hello, hello, hello. Okay, so we are going to get started here today with two different types of training. Number one is we are going to learn how to do a correct 3-option close using straight mortgage protection, meaning term life insurance with living benefits, chronic illness, critical injury, depending upon the product, terminal illness, right? And then the second side of the training will be a term that we use called mortgage protection payment and how to present that type of close. So let's get started. Okay, a couple things that you're going to want to have before you get ready to do the close. Number one is you're going to want to know what is their monthly payment every month. Why do you want to know that? Number one is because it's going to be your third option for straight mortgage protection. The second thing that you're going to want to know is obviously how much is their mortgage. I'll give you an example. Here's an example of an A lead, okay? Now on our A lead, our fresh lead, this woman's mortgage was $367,616, but we know that half of that, 50% of that, is $183,808. Why? Because it says it on there. Whether you're running a B lead or you're running a backfill lead is basically somebody who did a mortgage a year ago and now they just recently filled it out last week. And a lot of times maybe it won't be half the mortgage, it just has the full mortgage. Just take out your calculator and just hit yourself, if the mortgage is $200,000, what's one half of that? Okay, it's $100,000, 50%. Because 50% is going to be your second option. Your first option is going to be as close as you can get to their mortgage. Now, a couple rules that you want to go by. Now, these are just my own personal rules that I go by when I'm in the home. We've had a great deal of success over the last 6 years doing this type of sale and doing this type of close. My rule of thumb is I don't want them to have sticker shock, and neither should you. So how do you prevent them from having sticker shock? How do you prevent a woman who is 42 years old and her husband's 55 years old and you're presenting them something for $367,000? Odds are that premium payment every month is going to be in the high 2s, maybe even the 3s, depending upon the product, the term. You just don't know. Every circumstance is going to be different. That's why I tell people these are customized plans. There's no two plans that are ever the same. Everyone's going to be different. There's a lot of moving factors. So here's the rule of thumb. Rule number one is you want to get as close as you can to the full mortgage in the beginning. But you never want to go over $150 as the first option. Why? Because again, you don't want to give them sticker shock. Now, pay attention though during your conversation. Pay attention to what they're telling you. I had a woman yesterday tell me that she was paying over $350 a month for her term life insurance that she got through State Farm. Now, she was a 47-year-old female smoker, so the rates are going to be higher. She had a mortgage that was close to $375,000. So as soon as I ran it in the Forester's quote, it automatically came up. I mean, it was somewhere in the high 3s. So I'm saying to myself, why would I ever in a million years show her that as the first option when she just got done telling me that she wasn't able to continue with that insurance last year because the premium payment was so high? And so I was able to actually show her something that made sense economically in her budget, but still gave her an adequate amount of coverage. And her premium payment now is $186 a month. And she's getting $200,000 in coverage with living benefits. Her term life policy she used to have had no living benefits. So I built up the value in the product. I established relationship. I paid attention to everything she told me, and then I made sure that my first option didn't completely knock her out of the boat. Okay? So just to give you some ideas as to how you can present this to somebody who you don't want to give them the sticker shock. So let's get started so I can kind of give you an example here. Let's take Megan's and see what I did here with Megan's. So let's say, for example, the first option is we're just going to go with a very even number. Let's say their first option is $250,000. And just so you know, how I'm writing this right now is exactly how I do it in the home. So if you're taking notes, here's something I like to say when it's time to go for the close. And just so you know, and I'll show it to you, I do all my closes on the back of my lead. Look, it doesn't need to be fancy. You just need to be a pro. You need to be a professional. You have to have posture, the language. It doesn't need to look fancy. It doesn't have to be on some sort of, real fancy paper or anything like that. If you have the B leads and they're all, on the Excel spreadsheet, if you looked at my last video, I just do it right on the back of the piece of paper, just like I do here. Never needs to be fancy. So I do it just like this. I'll actually say, this is exactly what I'll say. I'll say, do me a favor, be patient with me. Give me 2 or 3 minutes. I want to put together a customized plan, and then we can kind of go through which one would make the most sense. And then I give them a brochure. I give them a trifold, something that can occupy their time. I may even ask for a bottle of water at that point if I haven't already been offered something to drink. And they'll never go, no, you can't have any water. Okay, so just some things just to occupy them and some tips for you folks. So I'll flip it over, and let's say my first option is here, $250,000. Let's say that was their mortgage, and that's going to cover 100%. Okay? And so let's go down here and let's go to 50%. And I want to give them 125,000. Let's just say that's $100 a month. And then let's just assume, just for the sake of this, I want to say that their third option is a mortgage protection payment program. Mortgage protection payment. MPP, okay, and I'll tell them that, and let's say that number is 36,000. Let's say that was 30 bucks a month. Okay, so let's go through it here for a second. What I did is I took number 1, number 2, number 3. So when they come back, flip the piece of paper over, and I hope everybody can see that. That's 250,000, 125,000, and 36,000. Okay? And so what I did is I actually showed them exactly what it is that they're getting. And I'll kind of say something like, here's the method behind my madness. I said, what I did here on the first one was this is going to cover 100% of your mortgage. You had said to me earlier, Megan and Stephen, that your main concern was making sure, Megan, that if anything happened to you, you wanted Stephen and the kids to be able to continue to have a roof over their head. Well, that's what this option right here does. This option right here will actually pay off the full mortgage of the home, and then you can access up to 95% of the living benefits, what we talked about earlier, in lump sum increments if anything was to ever occur during the next 30 years. If I'm looking at a 20-year, during the next 20 years, for example, okay? And then I go, this second option that I did, this is actually your mortgage cut in half. And so I'll literally say, sometimes it's better to have some than none. And so this is the second option right here, and this would actually pay off half your mortgage. And in the grand scheme of things, is it better to have all the interest paid off in one lump sum, and then you can actually bring your mortgage payment down, and then your family can turn that screen, Grace Mountain Mike. Why, is it backwards, Mike? Can you see it, Mike? Can you see, is it backwards or can you see it? Anyhow, so this is going to allow you to have half of your mortgage completely paid off. Now this third option, what this is, how did I come up with 36,000? What I did is I came up with something called a mortgage protection payment program. And what I did is I took your monthly payment and I actually timed it by 36 months. Which ultimately, what that's going to do is that's going to give your husband exactly 3 years. If anything was to happen to you, it's going to give your husband 3 years to figure out, does he want to stay in the home? Does he want to sell his home? Does he want to maybe use it as a rental property and earn some residual income? But he doesn't have to worry that it'll be foreclosed on. He doesn't have to worry that the bank is going to come calling. This option right here gives him an opportunity to have 3 years of mortgage payments. And that's how I do it every single time. 100%, 50%, and then I'll take their mortgage payment and times it by 3 years. Now, if they're a little bit older, you might, and when I say older, let's say they're maybe over 65 years old or 60 years old, you may want to lessen it down to 24 months. Again, every situation is going to be different, so you just have to play it by ear and figure out what their monthly payment is, because most mortgage protection payment programs, okay, you have to do at least above $25,000 for all the carriers to even offer any type of coverage. So it has to be over $25,000. So again, every situation is going to be different. You have to go off their mortgage payment and how old they are, and then stretch those out to whatever that number might look like. Sometimes this number is $75,000. Sometimes it's right at $25,000. It's every time it's going to be different. And so let me go right back through this. Again, once I've showed them all 3 options, I use this language right here. I go, now Megan, so you understand, this is what we define as a non-medical privilege. By definition, we do not have to have a nurse come out and draw your blood or do a urine sample or a mouth swab or a hair sample. This is all based on a cross-reference with the Medical Information Bureau. All the medical questions that I asked you earlier, as long as they come back true and correct, and your prescription check comes back true and correct, they will then offer you one of these 3 coverages. Our goal here today is to figure out which coverage makes the most sense for you. So based on that, out of these 3 right here, if you were to get approved for one, which one makes the most sense? And then I either slide the paper over, or I hold it up, and I don't talk. Don't say a word. Non-medical privilege, if you were to get approved, which one of these 3 makes the most sense? Okay? And then they will choose. Now, let's say we get into a situation where they go, well, I know I don't want this one over here. It just doesn't make any sense. I'm really torn between these 2 right here. I think I'm okay with this one right here. But you can just, right? And this, they're telling you what they're thinking. Listen, right? Listen to what they're telling you. If you have an inkling, okay, if you're getting a feeling in your gut, you as the agent, that they want to do this one, but that payment is just still a little too tight with the budget and everything they've got going on, here's what I'll do. I will say, if it's okay with you, Megan, would you mind if I just went back and found something that's more appropriate between the 250, because there's a huge gap here between 250 and 125. Would it be okay if I found something that's in between this that maybe makes more sense in the budget but still gives you adequate coverage? I've never had anybody go, nope. The only time they will say no is if they're like dead set, and they'll go, no, that's the one I want for sure. Nope, that's it. And then, boom, I circle it, and then I move right into my second close, which is we're going to go ahead and take the application. Okay? So I will then go back, for example, and I will then find something between 250 and 125. So let's say that number is 175,000. Okay? And let's say that number is $125 a month. I then will then take that off the calculator, I'll write it down on the piece of paper, and I'll say, so here's what I found. Something right there in the middle, it's about $125 a month. Does this make more sense? 9 out of 10 times, they will say, yes, that's it. Or they will go back to one of these other ones. But they'll never say, no, I just need more time. I mean, they are ready to go. Once they pick that one, bam. Now we go into the close. Great. So here's what I'm going to do for you this afternoon. Listen to what I said. Great. Here's what I'm going to do for you this afternoon, this evening, this morning. I am going to put together an electronic application. It takes me about 7 to 10 minutes. Here's all I'm going to need from you in order to make this happen. I'm going to need your driver's license. I'm going to need your doctor's name, address, and phone number. And I'm going to need those prescription medications that we talked about over the telephone the other day. If you could grab me those, that would be great. I'm going to get my computer fired up and we'll go ahead and get started. And I just reach right into my briefcase and start pulling out my computer. I don't wait for them. I'm not asking them, is it okay? I'm actually telling them, here's what we're going to do here today. And I just get right into it. I am not just assuming the sale, I am doing the sale, okay? And so that's the key with that. That's how you transition into that close. And I'm going to leave it right there because I have another video I'll do about actually how you close and ask for the bank account information. I'm not going to do that here today. One more I want to do for you here real quick, and then I am going to be off to my 7 o'clock appointment, which I am going to close. All right, so, and I apologize if it's coming in backwards, and you guys give me some feedback here and leave me some comments and tell me that it's coming in backwards. I will go back and I will redo the video for you. All right, let's get started. Let's use red. We are going to do what's called a mortgage protection payment program. When will you use this? A lot of times you will use this particular close with someone who is a little bit more on the age side, someone over age 60 or 65 or 70 or even 75. I had to do one the other day with a woman. She was 81 years old, and we went ahead and we took care of that for her with Transamerica. Okay? Now, a mortgage protection payment program is not term life product with living benefits. It is a whole life product. Okay? It pays out very similar to what's called like a final expense product. But we define it differently. And we do it based on MPP, meaning all three options are going to be MPP. So the number one rule for mortgage protection payment is you need to find out how much is their monthly payment every month. Then you have to take that monthly payment in your calculator and times it by 10 months. 15 months, 24 months, 36 months, whatever the number turns out to be, okay? And then what you're going to do is you're going to show it and present it not by the face value, but by how many months it gets them. Remember that last option I showed you, that 36-month option, okay? That's how you're going to present it. I'll show you. So, just for the sake of keeping it very simple, let's say somebody's monthly mortgage payment is $1,000 a month. That's what they're paying. And you found out that they are just not going to qualify for a term life product with living benefits. They're going to qualify for a whole life product. Here's how you would do it. Let's say, for instance, the first option is 10 months. Okay? 10 months. So I would say something like, I'm going to draw it out just like this. I'm going to go 10 months, and I'm going to say something like, that's going to be $100 a month. Let's say option number 2 was, for the sake of, we'll say 15 months. And let's say that option is $150 a month. And let's say the last option was 20 months. And let's say that was $200 a month. Now understand, especially for new people, whole life products are more expensive than term life products. That's why we're not a final expense company. But certain situations require you to still provide adequate coverage to the client and make sure that they're taken care of. Make sure there's light in here. Hopefully that helps. Hopefully you can see this. If you can't, please leave me comments. I'll redo the videos and I'll figure out a way to switch the camera. Now the close is the same. okay, you're still going to say to them, listen, this is a non-medical privilege, which it is. Nurse isn't going to come out and draw your blood. You're not going to have to go through all that. They're going to cross-reference your medical history, your prescription check, and we're going to come back and let you know whether or not this is an option that you're available for. But here's what I did for you here today. I listened to everything that you told me, Mary, and I put together a plan called a Mortgage Protection Payment Program. And what that's going to do is that's going to give Frank a certain number of payments that he can hold on to in the event that anything happened to you, in the event of catastrophe, like a passing. And if something happened to you, Frank would receive 10 months of mortgage protection payment. So basically what you're getting is this is your actual mortgage payment every single month for 10 months. And that's going to be at $100 a month until the day comes when you, God forbid, pass away. When that happens, Frank will get a lump sum amount, which he can then allocate and use for the next 10 months to figure out, does he want to stay here in the condo? Does he want to sell the condo? Does he want to rent it out? But he'll have peace of mind while he's going through that grief of losing his wife of 50 years. What does he want to do with this condo? The second option works the same way as the first. I just extended the time frame. This will give Frank 15 months. And then the third option gives Frank 20 months. Mary, based on everything that you and I spoke about here this afternoon, Frank, out of everything that we had a conversation with, which time frame do you believe would give you the greatest amount of time to get your affairs in order, figure out what you want to do at the condo, and begin to regroup your life? And that's exactly how I present it. And then I zip it. Same thing. And then let them pick which one, and they'll talk to each other. They will. They'll figure it out. And if they can't figure it out, same thing. I'll go back and show them something for 12 months or 17 months, for example. And then let's say they said, you know what? 15 months is an adequate time. Perfect. Here's what I'm going to do for you here today. Now, this is different because whole life applications are actual paper applications. We typically use a Foresters or a Transamerica, or you can even do a Phoenix Life. They offer this product, and it's a paper application. So instead of saying, hey, listen, I'm going to fire up my... Great, here's what I'm going to do for you here today. I'm going to need your doctor's name, address, and phone number, any prescription medications you're taking. And then I'm going to go ahead and I'm going to begin the application process. We're going to submit it over. We're together. We're going to submit it over to the carrier. She's going to take it over in underwriting. She's going to get back to us in about 5 to 7 business days and let us know exactly what's happening with your application, see if you're eligible for this mortgage protection payment program. And then I look down because I have got an application in front of me. I look down and I just start writing out the application. Name, address, phone number. Mary, what's your birth date? Great, got that. What's your social? Great, got that. Okay, and I'm going through everything, okay? And I'm going through that whole paper application. No different than the way I do the electronic application. Folks, this is how you do a 3-option close. Very simple, very clean, doesn't need to be complicated. A couple keywords, non-medical privilege, cross-reference the MIB check, cross-reference the prescription check. Here's what I'm going to do for you today. We're going to do an application together. I'm going to keep you in the loop. I'm going to give you a call here over the next 2 days, let you know exactly what the status is of your application. You and I are going to be in close contact here over the next few weeks, figuring out how we can get this application pushed through here for you here today. Okay? And so that's how you do that. Again, please leave me some comments. Let me know if you were able to understand this and see this. If not, I'll redo it so that maybe the camera's facing a different way. Thanks so much, guys. Go out there and kill it. Take care.